Hello, everyone. Thank you for joining for today's webinar. We are happy to present Large Cap Momentum Trading Trendline Talk hosted by Mike Herman of Warrior Trading. My name is Rob Lipson. I'm one of the VPs of Business Development and Sales here at Lightspeed. We always try to provide you with various topics and tools and presentations to give you some more information and education along the way for various trading tools and analysis and strategy. So we're happy to present, and we're happy to have Mike from Warrior present a different topic here for us today. I will read our brief disclosure here before we get started. This presentation is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation to buy, sell, or hold any specific security. Since we don't know everyone's investment objective or risk tolerance, we're not endorsing any specific trading strategies. Lightspeed Trading LLC. Lightspeed is not affiliated with these service providers. Data, information, and material is provided for information and educational purposes only. This content neither is nor should be construed as an offer, solicitation, or recommendation to buy or sell any securities. Any investment decisions made by the user through the use of such content is solely based on the user's independent analysis, taking into consideration your financial circumstances, investment objectives, and risk tolerance. Lightspeed does not endorse, offer, or recommend any of the services provided by any of the above service providers. Any service used to execute any trading strategy should be solely based on the independent analysis of the user. Okay, thank you. Now that we got that out of the way, we're happy to present here Large Cap Momentum Trading Trendline Talk. Mike Herman is the presenter. He is a full-time day trader and moderator and mentor from Warrior Trading, one of the co-founders of the Warrior Trading website and chat room community. He does a lot of moderating of their chat room and different webinars, and also does a lot of blogs for the website. So he's a longtime trader, has a lot of knowledge, and we're very happy to have him show you some information here. Without further ado, I'm just going to hand over the mic and the screen sharing to Mike here and let him take it away. So Mike, you should be able to take control here now, and off we go, guys. Thanks for waiting.
All right, good afternoon, everyone. Thanks, Rob, and Lightspeed community. Really happy to be here today to be able to spend some time with you guys talking a little bit about the type of trading that I do over at Warrior. So many of you guys here are probably familiar with Warrior Trading and the community that we have, especially the low float trading that Ross does. And I offer a completely different strategy, which is the large cap momentum strategy that is focused heavily on technicals. Trading the large cap stocks is definitely a little bit different of an approach, but if you understand the intricacies of technical analysis, you can really exploit these stocks and really produce some really nice moves out of them. So let's go ahead and get started here today. We're going to talk about advanced technical trendline trading. All right, so we're going to spend a little bit of time kind of leading up into trend lines and how to best utilize them, and talk a little bit about something that is extremely important that I like to focus on to help traders really start to get their trading to that next level, and that has to do with having an edge. So a trading edge is defined as a refined approach where the ability to identify and act upon specific entry and exit points will allow for an overall positive outcome over time. So from a mathematical standpoint here, a statistically positive outcome is the goal. Now this part is very important. Without an approach that satisfies this requirement, nothing else matters. So what this means here, guys, is if you're trading a strategy that if there is no statistical measurement of a positive outcome, then you most likely will have trouble gaining consistency, which is the basis of success in trading. Consistency is king. You must have this in order to succeed. So you have to develop an edge, which allows you to develop consistency. So we have to start from the very basic point of developing something that you feel comfortable with, and refining it to a point that it almost becomes like second nature to you. All right, so developing an edge is something that you guys need to focus heavily on in order to become a successful trader, and that may be focusing on trend lines, focusing on pivot points, top reversals or bottom reversals or whatever it may be, but definitely focusing on one single approach and master that before moving on. All right, so developing your edge. How do you do this? What's the proper process in order to develop a statistically positive edge? Well, it's a constant evolution in processes where an ongoing analysis of ideas and refinements take place to reach a consistent, actionable system. Right? Locating price level zones of significance produces non-random reactions which allow for predictable inflection points and subsequent trends. What this is basically saying here, guys, is that if you're able to pinpoint these significant areas of support and resistance, this is where the reactions become very predictable, and as day traders, we can capitalize on those situations. If you're able to pinpoint those areas and able to capitalize on them, you will be a very successful trader. Now, this is crucial to understand as a technical trader. Limiting exposure to these precise moments where an imbalance occurs in conjunction with confirming price action allows us to execute trades with precision. Now, this is what I was just speaking about, is sitting tight, being patient, waiting for those areas of technical significance to present themselves. Once that happens, the reactions at these points become very predictable, and the probability of a successful trade goes through the roof. All right. Now, I understand that patience can be a very difficult thing for a new trader, as it can be a trader that spent a lot of time trying to figure out what works for them. But I can tell you, as a longtime trader, going through the hurdles and the pitfalls, pretty much everything you can imagine, patience is key. It really is. I mean, you can trade all day. More trades definitely does not equal more money. I can tell you that from experience, and most other successful traders that you ask will tell you the same thing. Sitting tight, waiting for those highly predictable setups are what will make you a lot of money and ultimately become consistently successful, right? So what is your edge? That's a question I want all of you to ask yourself, because if you can't answer that question, then you need to go back to basics and figure out what it is that you are best at. And the only way you can do that is by tracking your trades, going back to look at where your statistical approach is best, right? So a trader must be able to demonstrate patience and discipline at all times, as well as adhere to their trade strategy and risk management parameters. Right? You develop an edge by becoming proficient at a specific trading strategy, such as VWAP trading, mean reversion, reversal trading, news plays, trend following, bull and bear flags, breakouts, breakdowns. All right, it can be anything. It can be anything, but the important takeaway here is to focus in on one single approach. And for me, it's advanced technical analysis. I only will take a trade if we are at a significant level of support or resistance, right? Otherwise, I will not be touching the keys. I will not be taking day trades, all right? Be opportunistic, very important here. Be very patient until your edge presents itself, and become aggressive, as most institutions and funds do not have the ability to move freely across different time frames and markets, etc. So what this is saying here is that we have the opportunity as day traders to make very quick movements, right? Be in and out of trades, out of something if it's not working, add to our trade, press into the trade if it is working. Whereas it takes a larger investor, such as an institution or a fund, to move into a trade. So being that we have the ability to be quick on our feet, sort of say, we can move in and out of trades much quicker than the average person who is trying to maneuver themselves in the market, which allows us to become very aggressive at points where the probability for a day trade is high. Right, so we can become aggressive at those points, which again allows us to exploit those very significant technical points. Now, what we teach at Warrior as a whole is definitely to have a go-to strategy, develop your edge, because the idea behind this approach is that if you try to focus on one single approach, you will reach the end result much more quickly than you will if you try to do 5 different things at once. If you're trying to trade reversals, if you're trying to trend trade, if you're trying to buy bull flags or sell bear flags, your timeline from getting from the beginning to becoming consistently profitable will take a lot longer, opposed to just picking one single approach and sticking with it until you are able to develop a consistent outcome. All right, so definitely ask yourself the question, what is your edge? If you can't answer that, if you can't specify a specific strategy, then go back to the drawing board and understand what that is for your own benefit. It will only make your trading better. Okay, now some general charting techniques here before we really jump into the meat of the action on trend lines. So this is arguably the most important tool for a high-level technical trader, is the ability to decipher market data and price action within the charts. So something that I'm a big believer in is keeping it simple, right? Simplicity. The most efficient way to gain an accurate understanding of price action and the underlying tone of the market is to keep your charts clean. This will allow the trader's focus to remain on what matters most, price action. All right, so something here, guys, is that I see way too many new traders come in, whether it be through private mentoring or in through our chat rooms, and they have their charts so clustered with indicators that they can't even see the candles anymore. And that's a real problem, because what happens there is trying to decipher what's going on between all these different indicators and getting alignment and this and that is the hesitation factor, right? You're hesitating because you're not really 100% sure of what these indicators are telling you, so you hesitate. Hesitation will destroy you as a trader, especially in momentum trading. All right, so the best way to approach your charting to make sure you're seeing what matters most is to keep it clean, right? Remove all of your indicators. Try to just watch the price action against the most significant support and resistance levels and make your decision from there. All right, consistency. Always maintain the same format between different charting timeframes, as this will allow for efficient analysis of each situation by focusing on only the most relevant information. In result, the learning curve of successful chart reading techniques will drastically decline. This is the same reasoning as behind having an edge, right? Having your go-to strategy. If you're able to keep it consistent, right, between your charting techniques, again, your learning curve will be shortened drastically. And as a trader, I'm pretty sure the goal of everyone is to be consistently profitable. So if you want that learning curve reduced and you want to reach that goal sooner, make sure you keep it consistent between your different charting approaches. All right, so for me, just so you guys know, I use the VWAP, I use volume indicator at the bottom, just the normal volume bars, and I use a 20 exponential moving average, and that is it, right? Nothing else, because I am a big believer in watching the action that takes place through the candles and watching how it reacts to the technicals on the chart, which we'll get to here shortly. All right, price action. This is paramount. I am a big believer in price action. You have to understand what it is, and you need to start watching it much more closely if you want to have precision in your trading. So price action can be defined as the way in which the market moves, thus creating what is known as market structure, which is simply the historical movements of market where support and resistance originates. So remember, the majority of price action is random on a day-to-day basis, and it is imperative to locate these areas of market imbalances where price action becomes much less random in order to have a favorable trading outcome. So again, what this means is that we are trying to locate these areas where the non-random price action exists, and where those points exist are at the significant support and resistance levels, right? Big pivot points, big established trend lines over long periods of time. And I'm not talking on 2-minute or 1-minute or 5-minute charts. I'm talking on daily charts that are going back years and years, that we're able to establish very well-defined trend lines within, very small zones of reaction points. So it's extremely accurate, extremely precise, and the longer term you're able to draw these trend lines and support and resistance levels on the more powerful they become and the less random the price action gets at that point, which again really increases the probability of a successful trade. All right, so let's jump into how to establish trend line support and resistance. Now, obviously you guys are all familiar with what support and resistance is, but I want to be sure you have a true grasp on what a true support or resistance level actually is. So support, it's a point in time where price action finds a support zone where demand is greater than supply and begins to revert back higher. Okay, so obviously support is where there's going to be buyers present, right? And they will be able to turn the stock around. Resistance, just the opposite, a point in time where price action finds a resistance zone where supply is greater than demand and begins to revert back lower. The takeaway from this slide here, guys, is to understand that support and resistance are zones. They are never a finite number. I see way too many traders come in and say, hey, you said the support was in this area around $10 or whatever it was. And the answer to the question is, listen, it's a zone. You can't expect, nothing is exact. Trading is definitely not a science. Support and resistance are zones. So you have to be willing to give your trade some time and an opportunity to react to these zones before getting in and out of the trade too many times, right? So you want to give it some time and really pay close attention to that action to see how it's reacting. So always support and resistance is a zone. It's not a finite number. All right, trend lines. Trend lines require major swings in the market to be effective. Quick, violent spikes beyond the short-term trend line is often a buying or selling climax, which is best analyzed on faster trading time frames, so it is a natural exhaustion point for the counter trend move, thus providing a significantly less random situation, providing a trading opportunity. All right, so what you guys have to understand about trend lines is that this is something I see traders use way too loosely. Okay, they come in just wanting to draw very short-term trend lines and will trade specifically off those trend lines and really won't look towards anything else. Now, I understand that trend lines can be a very subjective subject because there are so many different ways to draw them. However, I'm going to dispel that, because if you use a very macro time frame or very macro view of the price data, you cannot really miss these well-established lines, which are going to be the most powerful. And in my trading, what I do is I sit and wait for those levels to be interacted with. Once they are interacted with, that's the point in time where I start initiating trades, right? Because it's a high probability with a low risk with massive potential, right? The smaller time frames, the less time you start to incorporate data, the less likely those trend lines are going to work, okay? So since I'm a very infrequent trader, I take maybe 1 to 2 trades a day, I sit and wait for those home run potential opportunities and then become very aggressive. And typically we see them on a day-to-day basis with the stocks that we're trading, but sometimes we don't. What's most important is you wait for these well-established lines to present themselves and then become aggressive. Use the most data that you can, always from a daily chart, and make sure you incorporate that into your trend line analysis. So trend lines are another intricacy of market structure where prevailing trends are established by the connection of meaningful swing high and swing low points. There's a striking similarity to pivots, just in an angled fashion where visually it allows us to identify a trend. The more identifiable the trend, the more valid the trend lines used for support and resistance. Major breakouts of established macro trends are phenomenal trading opportunities due to the strength the trend line gains with more price action interactions over time. Okay, so the more interactions you have with the trend line over time, the stronger the line becomes. So when that line eventually breaks, we should see a violent move, and that's a trading opportunity. All right, there's 3 types of trend lines that you guys need to be familiar with. All right, there's a standard trend line, which I refer to as a no-cut trend line, which means it's drawn between higher highs or higher lows or both. All right, so it's always on the outside of the price action, a standard trend line. Now, a complex trend line is what we call a best fit or cut through. Now, complex trend lines will cut through price action, but they're best utilized when clear, identifiable trend is not present over a long term. It begins with an early established trend that transitions into a cut through price action, thus the same line acting as support and resistance. So what a complex line is where you'll start with, for example, you'll start with ascending support. So a trend line going from left to right in an upward fashion, where the stock may break back down below that line and then come back up to retest it and fail. That is now considered a complex line, which we'll show plenty of examples here shortly. The next one is a parallel trend line, which again is a no cut, and this is by drawing a standard trend line right between higher highs or higher lows, and then you can duplicate that line and then move it to the other side of the trend and get it to fit, so you now have what we call a channel. And if you have a stock trading within a channel over a long period of time, you can do what's called channel surf, right? Stock comes into the bottom of the channel, reacts, starts to catch support, you buy it, you sell it up through as it's bouncing into the other side of the line, right? And sell it as it starts to revert back lower, right? Which we'll show plenty of examples of those as well. So another very important part of trend lines, something called length of swing. Some of you may or may not have heard of this term, but it is something that when drawing trend lines, you need to be aware of. So length of swing refers to the extreme swings in the market, which then create pivot points used to anchor the most powerful trend lines. These are known as first, second, and third order pivots. Now, one of the biggest questions I get is when students are going through my technical analysis course is, where do you start drawing the trend lines? Where's the first anchor point? How do you know where to originate the lines, and how do you know where to connect them? And that's where the big factor of subjectivity comes in, is because people don't know where to start these trend lines. And that's why trend lines start to become so loosely used, and it's hard to know which one is going to be effective. So how do you do away with all that? Well, the only way to eliminate all of that uncertainty is to back your chart data out and use the most that you can, and look for the most significant swings in the market and use those as your anchor points. Because if you think about it, those extreme moves in the market are points in time where memory is created. Traders remember a stock that makes a huge move like that in the upwards or the downward swing, right? So those are emotional points in a stock's movement, and if you can incorporate that into establishing your lines, those are going to set the anchor points for your lines, thus making them much more effective. All right, so again, utilizing the most extreme moves in the market will remove the subjectivity in your lines, just what we just talked about. You really can't have too much subjectivity if you're using those extreme points, because those are the points to use when establishing your lines. There's no other options to choose from. So when selecting the points to originate and continue a trend line, you must scrutinize the chart to locate first, second, and third order pivots to produce a valid trend line. Now, what are these pivots? What is length of swing? You know, people ask, what are first and third and second order pivots? And that would be displayed by this chart right here. So you can see right here on this light speed chart that I use, you can see how you have the extreme swings in the market. All right. Now, these are what are called as length of swing or first, second, third order pivots. And again, remember I said the most extreme swings in the market. So you can see back here in 2017 on NVIDIA, we had a swing upwards, right? We didn't get another swing higher until here in June, right? So this is how we connected the line, right? We started here, connected here, and then we extended the line out. We got another touch right here, and then another 1, 2, 3. You can see how it's starting to revert off that line. But look what happens every time NVIDIA comes into this line, right? Big reactions, volume, big volume spike, pullback, big volume spike, pullback, right? Here we get a volume hit, not as big, but still higher, the relative volume. And then look at the resulting move, pullback, another hit, pull, hit, pull, hit, pull. So we can see that this line is a very valid trend line. And the next time it comes into it, we can expect a reaction. And as day traders, we can take advantage of that. Even as swing traders, if it reacts to the line and holds below, we can look to initiate a short position in this case. So this is how you want to establish your trend lines for maximum effectiveness, using these length of swing or first or second, third order pivots, connecting them and letting it be very clear as to what the trend line is going to connect to, and that will establish a very strong point of support or resistance depending on which type of trend line you're drawing. But important to understand this concept, because this is the stepping stone to being able to draw these very effective lines. All right, so talking about a standard trend line. Remember, standard trend lines do not cut through price action. It's either ascending support or descending support, or ascending resistance, descending resistance. So as you can see here, you have a standard trend line in the form of ascending support. This is ICPT on a very long time frame, right? We can see all the way back to 2013. And again, guys, this is something that is so imperative, is to have proper data and go back in time for as long as there is stock data on a chart. And the Lightspeed provides that, which is incredible, because there's a lot of charting platforms that don't provide that much data, right? They only provide a few months, few years, and they just stop. But in order to have this edge, right, the technical analysis edge in the market, you have to have the data available. And that's what I love about the Lightspeed charts, is that they are very distilled down to incorporate only what is needed and very straightforward. And you can see that we're able to produce these types of trend lines, which allows us to key in on these big trading opportunities. So you can see here that we start way back in time, 2012, we start the origination of our ascending support. We get a connection in through here in June of 2013, and then another connection in through 2016, 2017, and then here is where we get the breakdown of the trend line. This is where we actually traded this stock, and look at the resulting move when we broke through. All right, so you have multiple extreme tests that take place on ICPT into this trend line, which validates the line. Validation of a trend line is extremely important, because it will give you confidence to become aggressive once that line is interacted with once again. All right, so a bunch of reactions here. Again, we get the break below, the retest of the line, and fail. Look at the failure here, 125, this stock fails. It fades quickly over 2 days down to just above $50. Right, so a huge, huge hit right here on this trend line break strategy, but you can see it breaks. Look at the volume at the trigger. Trigger is the break of the trend line. The volume that comes in as you break, that is confirmation. You have volume at the trigger, then you better be on high alert for a trade, because this is what makes the big trades happen. All right, so very well defined ascending support line here, break at the trend line, volume at the trigger, and you can look to take that position. All right, so just an example of a standard trend line here. We'll move into a parallel trend line, which is basically two standard trend lines to make up a channel. Now, I love trading these channels when they break, because the reactions that we get are huge. Most of the time, we see some very, very big resulting momentum moves once these long-term channels break. Now, this is CSX on a very long-term time frame. You can see starting back in 2009. So I go as far back as I need to, like I said, to really locate these important areas to establish very valid lines that I can rely on and become aggressive in my trade. So we start this trend line way back here in late 2008 at an extreme, and we connect it to the next extreme, which is going to be way over here in 2015. All right, now what I did with this trend line is, if I start to see what looks like there might be a channel present, I will simply duplicate the line and drag it down to the support that we have. And this one fell right in place, couldn't really been any better. We have an extreme test down here, and we have another extreme test right here. You can see it bounced off that level, and look at the move it had over several months back higher. But the real key to this is the break of the macro trend line here, when you have volume at the trigger again. All right, so let's back up a second just to make sure you guys understand what the channel is. It's a macro channel here made up by two parallel trend lines. So you have extreme tests, and these are what are going to make your anchor points, right? Use these as anchor points, then extend the line out. All right, you always want to try to connect the most extreme points and then extend that line out and see where the resulting line ends up, because most of the time that's going to be a very important point because of the reactions in the past, right? The angle is what's important. If you're getting reactions at the angle between the two extreme points, the next time it reacts with that level should be a big reaction. All right, same thing with the bottom side, big support that it hit twice, and look what happens once we break out of the macro channel. We break through the upside, look at the volume that comes in on that day. Huge volume at the trigger, breaks to the upside, runs from 45 over the course of several months here up to 55, and then beyond, you know, high of 60 a few months later. But we day traded this on this day, and it was an incredible day trader, right? We also took some options plays on this, long options, monthly options, a month or two out, and we were able to get you know, very nice wins, because we know that these trend line breaks out of these macro channels are extremely predictable. And it's nice to be able to trade this strategy, because there's many different options, right? You can trade the bounce off the support, you can trade the fade off the resistance, and then if it breaks out, you can day trade the violent move, right? Because volatility is what us day traders are looking for. Then you can even consider buying far out puts or calls depending on which way the stock breaks. So plenty of opportunity here, and it's really not that difficult to establish your lines if you're using the most extreme swings in the market as your anchor points. All right, another example, here's Apple. Now, Apple has been trading within this channel for several years now. You can see many different opportunities here as you get to both the top side and bottom side of the channel, right? Higher highs. Just trying to illustrate here, guys, how to initiate your trend lines. And again, using the most extreme points in the market as your anchor points will most of the time provide you with a very valid line. You can see we simply did that with Apple, took our most extreme point, connected to the next most extreme point, extended the line out. Same thing down here, most extreme point, extended the line out. We've now got a macro channel in play. You can see we got outside the channel. We made a nice quick run up to 180, pulled back. We've been holding that trend line up until beginning of 2018 here. Look what happens once you break down below the trend line, right? And this right here is validation in itself that tells you this is a big level. Once that trend line breaks where it lies at that point at 170, hard fade to the downside here to 150. All right, we come back up just recently, reclaim that trend line, and we're holding above it right now. So when the market starts to become strong again, this is a definite candidate to look for a continuation to the upside, because we've now broken back outside that macro channel again. And if we can hold outside of that, there's great opportunity here for continuation to the long side. All right, but takeaway from this, guys, is just looking at it from a high level view, high level perspective, understanding what to use as anchor points when drawing your trend lines to keep them very effective. All right, so now we're going to jump into complex trend lines. These are probably the ones that traders find the most difficulty with, because they are difficult to see. There's no question, they are difficult to see, but they are very effective in many different scenarios. And as you start to develop a skill to draw proper trend lines, you will start to transition into seeing these complex trend lines much more clearly. But it's something we go into much more detail in my courses over at Warrior, and we talk about it every day in the chat rooms. And I help traders every day locate these lines and help them get them properly placed on the chart. So complex trend line, as I said, starts off as a standard trend line, but then at some point cuts through price action and then acts as support or resistance on the other side. So as you can see here on this stock, ACOR, it starts out as support, right? Starts out as support, then it cuts to the price action, but then it acts as resistance over here, right? Very nice resistance. So you can see we use this as support, and this day, this stock comes selling off into that trend line. Look at the volume. Look at the volume on this stock. Now, this stock actually closed below that support trend line on the day that it sold off. Huge volume, right? Huge volume at the trigger one more time here. And look what happens. Once it closes, opens up the next day, sells off from 22 over a period of about 2 months here down to 14. So big potential for a swing trade, right? And again, we take these as swings via options all the time. So well-established trend lines provide all different types of trading opportunities, whether it be day trading, swing trading, options trading, whatever it may be. There's plenty of opportunities and there's something for everyone. So you can see here, now once we broke below, we started to come back up. Look at what happens on the retest of this trend line, right? We retest it, we sell back off, we close well off the highs on that day. The next day, the stock gaps down from 28 all the way down here to 18, almost a 10-point move after hitting that trend line, right? Comes back up again. Look at the violent reaction we get on the day that we test the trend line again. One more test, fail. Look at this gap down from 30 bucks all the way down to 17 or 16 bucks. So another huge move off a very well-established trend line. Right? So what starts as support now becomes resistance over here because the price action comes back up and retests and fails several times. So again, difference between a standard and a complex is complex simply cuts through, standard stays on the outside. Another example of a complex line, we just traded this the other day, OLED. Very volatile name, but can put in some huge range, which as day traders, we're always looking for that range because that provides massive trading opportunities. And this is a line that we used just the other day, and I wanted to include it today because of how well it reacted. So you can see multiple failed tests here. What started out as ascending resistance, and ascending resistance, remember, is catching the resistance on the upswing, which you can see is higher highs here as we move forward in time. But multiple failed tests, test and fail, test, fail, test, fail. Now, it does turn into a complex trend line because the price action is above it, but it doesn't interact with that trend line until just the other day right here where we were gapping down and we were testing it. So you can see the line originates as ascending resistance, which then transitions into intraday support. So what we're going to see next is how this stock reacted to this line in the intraday time frame. So take note of how well this is established right here. These tests to the penny on the trend line, we extended it out, and then look what happens just the other day as the stock trades on the gap down. So market opens, gap down, look what happens. Right to it, to the penny on the trend line. So complex trend line support, test intraday. And this is the stuff, this is what we're trading every day, guys, over at Warrior. We are looking for these big identifiable levels, becoming aggressive once they hit, and they are providing trading opportunities. So we traded this on the break below the trend line, got short, and a really nice move here, continuation move. Remember, what you see when these big trend lines break is often good continuation that you can definitely be a part of. So that's just an example of how accurate these trend lines can be if using the proper data over a long period of time. It's very important to utilize all the data you can to gain maximum effectiveness. All right, another example of complex trend line, just to show you visually what you should be looking for. Resistance, right? Descending resistance. This line starts out as very well-defined descending resistance in multiple attempts. Now, it cuts through, but look what it provides over here. Multiple points of support. Look at the day it sold off. Massive volume on the sell-off here, but bounces off that trend line, closes well above. You have a retest of the trend line 2 more times, and then a move, strong move back up from 14 all the way back up towards 34, 35 bucks, just off of support once that trend line held, right? We get a big sell-off volume at the trigger, and since we close back above, that means that is still holding as valid support, and we get a retest a few days later, now we start to base out off the retest, we start to round back out, and a really nice massive move off the bottom there. So just another visual example of how to use complex trend lines in everyday trading. You really need to pay very close attention to the charts. Most traders looking initially at a chart, it will be a challenge to pick out complex trend lines, but as I said, as you spend more time developing your skill in just establishing general support and resistance with standard trend lines, you'll start to become much more in tune with how to establish proper complex lines. All right, so that brings us to the end of the trend line section, and I wanted to give you guys a chance to ask any questions that you may have had that had come up during the course there, or anything else in general that you had questions on. So do I trade stocks, options, Forex, futures? I trade strictly stocks. I will trade options when I see those long-term time frame channels setting up that do break. We traded at CSX. We've traded a few other here in the past. They're a much more rare trade to see because they have to be so well defined, but the probability of them working out is very high. So we wait for those to present themselves and then become aggressive. I do not use weekly charts, only daily charts. You must use daily charts only for trend lines. Trend lines work definitely on all price levels, but again, you have to incorporate as much data as you can and definitely use the daily chart. So do trend lines work well below $10? So typically the stocks trading below $10 are pure momentum based. So technicals don't really apply as much as they do to large cap stocks, and I typically only stick to large cap stock trading. So what causes the violent moves off the trend lines? Good question, Andrew. So being that there's such long-term macro lines and established support and resistance, a move that starts to move outside of the established trend over such a long period of time, that in itself creates the volatility because it's such a long-term established trend. So when it's starting to move out of its normal, then we start to see some violent trading happen. I use trend lines typically going back several years. Anything less than a year, I become very skeptical on. I need to see a much longer term line in order to become aggressive, in order to trade off of it. I draw trend lines based only off the daily chart. How far do I go back to determine the starting point? Well, I really go back as far as I need to. I typically try to get as much data on the chart, back to the beginning of time for that stock and analyze it on a high level view. And then that's where I'll start to determine the anchor point. So typically, if I have to go back to the year 2000 or 1990s, I'll do it. And I've done it several times, actually recently as well. Does fundamentals play a role? Nope. Not really at all. We're technical traders here, and fundamentals, don't play enough of a role for a short-term decision. Do I use smaller time frame trend lines? No, I really don't. I just use the long-term time frames for the trend lines, and I really try to only wait for those levels to hit because, again, those are going to be the most predictable moves. I don't trade inside the channel. I mean, if there is something that's setting up, inside the channel for a day trade, then potentially I'll trade it. Like there's a big gap that's present, then potentially I'll trade it. I don't just trade off of trend lines. This is just a part of the strategy. So I trade off of trend lines, I trade off of pivots, I trade off of gaps. That's all part of our full course at Warrior Trading. But I just wanted to give you guys an insight into proper trend lines because I see so many people draw them incorrectly and wonder why their trades didn't work. So what I want to try to do is remove the subjectivity and show you guys how to draw the most effective lines. So Barry, usually you look to draw trend lines from the bottoms of the bars. So I'll use the tops and bottoms of the bars, wherever I can get the best interactions with the line is where I'm going to use it, right? But I typically want to be very precise in that I'm trying to stick with the very tops or bottoms of the candles or the wicks on the tops or bottoms of the candles. You don't want your trend line just slicing through all kinds of candles because then it doesn't become effective. So all the charts that I'm using here are Lightspeed. Obviously, I use Lightspeed as my broker, so their charts naturally are involved in my trading, and they have all the data that you need and the ability to draw the technicals that you need to take the trades. I am plotting all the lines on the daily, and then when you switch over to an intraday, they carry over. Just a fully technical trader. So Terry, that's a great question. Is it because algorithms use trend lines? That's exactly right. That's definitely true. And when algorithms see those very high level macro channels and patterns, that's something that they're going to respond to as well, especially when they're that well defined as some of the examples that we saw. You can expect those to react as well, which again, knowing how they're going to respond can really help you in determining how to trade the stock. Do I use the highs of the candles or the body? So like I said, I try to get the best fit possible. If it means I have to slice through a few wicks of the candles to get that best fit, then I'll do it. But typically I try to stay as precise as I can to make sure I hit only the very tops or very bottoms of the candles. Understandably, when using a complex line, yes, there will be some cut through action, but the overall interactions you want to see react to the line. So what is a typical position size when entering a trade? Well, it's going to depend. It's going to depend on the price of the stock, the volatility of the stock, the amount of room it has to move. I typically try to stay, within 1 to 3,000 share range. If it's a cheaper stock, and maybe a couple thousand, but I try to be aggressive as I can when these setups present themselves because I know what to expect. I've had enough time in front of the computer, enough exposure to know what to expect out of these plays. So I size accordingly. But there's a lot of factors that go into that outside of just the setup. Such as volatility, volume, just the price of the stock. There's a lot of factors that go into it. So how do I choose which symbols to start watching, adding to the watch list? Well, we use a simple gap scanner that's telling us, what's moving up and down. I use the Lightspeed list that tells us what's up and what's down in the morning, and then I take a look at the charts from there and determine which has the best technicals. So Greg, how long does it usually take to be profitable with the strategy? Well, the answer to that, again, is it depends, right? It depends how much time you're able to spend, applying the strategy. Everyone learns at a different pace, but with the support of the warrior community, as well as the right tools, such as something like Lightspeed is able to offer, we see students become profitable in a much quicker time frame than they would if they're trying to do it on their own. So I do not trade pre-market. So when do I buy a breakout of the trend line? So that's going to greatly depend on the volume. It depends if the volume is heavy enough moving outside the line, if it's coming into the line and starting to hold and reverse off the line. It's really going to depend on the volume profile that comes into play once that line is interacted with. And again, we dive into this much deeper in the full course, but it all has to do with price action and volume. We're typically looking for day trades off of these trend lines, Kevin, but there are a lot of opportunities that we trade on options that will hold for a month or two at a time, looking for huge moves, right? 2 or 3 or 400% moves in the options. So what time frame do I focus on more, 5 minute or 1 minute? Well, I don't use the 1 minute at all. So I definitely watch the 5 minute a lot, and I watch the 2 minute trading large caps, because what that does for me is, as opposed to the 1 minute, the 2 minute is going to give me twice the confirmation, and it's going to also cut the noise in half, right? So it's going to be a nice medium in between the 1 and the 5. Nick, so if the day trade starts out wrong, how much room do you give it to work before stopping out? And that's a good question as well. You have to have a line in the sand. Every trader will have their max pain level. You need to have that established before taking any trades, obviously. But these are large cap stocks. They are going to tend to oscillate much more than lower price stocks. So you have to understand that wider stops and smaller positions is going to be to your benefit, right? You need to give them a little bit of room to get started. And if they start to show the action that you want to see, whether it's support or resistance, then that's a point where I will start adding more into my position or pressing the trade. So again, it's going to depend on the action, the price action that we see at these levels. Do I wait for the SPY to confirm the market direction before entering trade? So that's a very good question, Steve. I definitely like to align my trades with the market. That's a big factor, because the market will definitely be a big driving force behind these large cap trades. So ideally, yes, I do try to align the market in every single trade I take. In the event the market is not in alignment, but the trade setup is very good, I will probably be less aggressive, right? I'll be less aggressive to start out, and if it starts to work from there, then I'll start to press the trade. But in a situation where the market is in alignment with the trade setup, then that's a situation where I'd be very aggressive from the get-go. So it's just going to depend on the situation, in the moment, right? If the market is in alignment or not. But I will say that just because the market isn't in full alignment with the trade doesn't mean I'll sit out, because you have to remember that these setups that we're trading are very technically significant. They're from a macro view, a very long-term view of the data. So we should have definitely some reaction. It's just whether or not that reaction is going to stick for a big move. So I typically will trade these setups, and it's just going to depend. My sizing will depend on the market action. Barry, today was kind of a slow day. Last 2 days we traded Facebook several times and made out very well. We had GIS on watch today. It just was very choppy. The SPY was very choppy today. We had that big snowstorm in the Northeast, so that was probably affecting a lot of people, and was responsible for the lack of volumes and volatility in the market. So we sat tight today, but that's okay. That's part of the strategy, is sitting tight. Bob, so once I'm in a trade, I typically just kind of manage it on the 5 minute, manage it closely on the 5 minute, and let it move as much as it needs to before I decide I want to exit. So typically the 5 minute. All right, guys. So with that, again, I thank you for stopping by, checking out the webinar. Feel free to stop by Warrior and reach out to us at any time. Happy to help you guys with your trading, understanding technicals on a much more advanced level, and it will really improve your trading. So again, thanks to Rob and Lightspeed for having me today.
Thank you. Thank you, Mike. Sorry. That was great. I hope everyone really was able to take some great points away from the presentation here. Everyone, definitely check out warriortrading.com to see more on blogs and information and courses that Warrior Trading offers. And we're happy to host them again for various presentations. So Mike, we thank you so much. Hope to have you again soon. And guys, the recording will be on the website within a couple days. So if you missed anything, you certainly can check it out. If you have some questions, you could email us or go to the Warrior website and email them as well. So we thank you for attending, and guys, have a great night. Everyone in the Northeast, stay warm out of the storm, and everyone else, have a great night. Thank you very much. Thanks, Mike.